This is a huge bearish engulfing candlestick pattern. That is a bearish reversal pattern that shows that market want to go bearish, all right? And that is under that note that this trade was taken, even though the SL is very huge, all right? So, but when you look at the TP, the TP for this trade is over 1,310 pip. Let me show you in a while. You see that? Look at the down target, 1,310 pips. That is about 1,000. That is exactly $131. $131. All right. That is it. So candlestick pattern help us to determine trade entry. First of all, at the end of that, there is something occur that is called turning pattern, and that's the reason why I have to take the profit down to this point. Turning pattern occurred here, and this helped. What helped to determine those turning patterns were candlestick patterns as well. Look at this. This is bearish engulfing. That's bearish reversal pattern as well. This is also bearish engulfing. When you see the arrangement of this, you see that this one started, this one take it off, and this one came and couldn't go up to that point again. So this is practically bringing into what we call head and shoulder pattern. Head and shoulder pattern, all right, that's head and shoulder top, not head and shoulder bottom. Head and shoulder bottom, all right. So head and shoulder pattern combining together with candlestick pattern to show us that the trade is going bearishly, all right. So you can see the zone, this zone, and as well as this zone below it. This is where we have the 4-hour support zone, all right, coming down this way, 4-hour support zone. And here is where we have a 15 minutes order block. Of course, this previously was a buy order block, all right. Eventually, when the market came back and break below and start coming back, you know, it's like it's now turning to a kind of resistance to it. So combined together with 15-minute resistance zone here, this is where we have this yellow orange line here. All right. So these are, I'm just trying to define the zone for you, the zones here for you. So let's go back and see. There are other trades. Today is Thursday, July 9, 2026, this early morning. Of course, I slept, I woke up, and I slept very early, and I woke up around 11 p.m. So since then, I've been awake. So it gave me opportunity to take all this trade this early morning. Look at this very particular one, right? This particular one was, you can see the candlestick pattern as well. This is that cloud. That cloud is a bearish reversal pattern, all right? So immediately came back to this zone here and showed that cloud. Of course, the trade was taken again. Another trade was taken, and this trade is about 130 something, 149 pips. The other one was 131 pips, and this is risk to reward of 1:6 risk to reward ratio. So this is 1,490 pips, which is $149. All right, that's what it produced. All right, that's taking. So now it was time to take a buy. It was time to take a buy trade after that this happened. So here again, you will observe as well. So let me show you once again. Here we have this candlestick pattern, doubling two candlestick pattern. This is bullish reversal pattern. So you can call it bullish engulfing and tweezer bottom. These are those two candles. These two candles where I circled now. Maybe let me bring it in so that guys will see it better. So it's doubled as tweezer bottom. We have the doubled as tweezer bottom. That's these two candles. It doubled as tweezer bottom. All right, tweezer bottom, bullish reversal pattern, candlestick pattern. Also doubled as bullish engulfing. All right, that is candlestick, another candlestick reversal pattern. bullish reversal pattern as well. And then we can also spot what we can call morning star here. Morning star, that's joining these three candles together. Morning star. So those three candles combine together to give us even a variation of three different candlestick reversal pattern, all bullish reversals. So you can see why the market actually reversed. So knowledge of candlestick pattern is very, very vital because it helps you to take your trade in your zone when market enters your zone. All right, the zone you have marked. If you know how to mark out zone that market more respect. All right, so they help you to grab that trade at that time. So that's how we took this trade. This is this to reward ratio. This is 1,790 people. That's $179. Of course, I didn't use this stop loss in reality. Look at the stop loss I used here. That was just what I set on my stop loss, just about, yeah, exactly what I would said. So we have 1 to 8 risk to reward ratio as well. All right, right here. And there's another one here. You can see this one here. You can see this trade here. This is particularly when this candle engulfed all this plenty candle, we call it a variation of bullish engulfing as well. So I have to take this trade. But the question now, I want to explain to you, because this is 101 pip. 1,001 pip, which is $101. $101. Okay, using 0.01 loss size. Of course, if you are using one standard loss size, here we're talking about $10,000. $10,000. All right. If you are using standard loss size, this is $10,000. Only this one trade will get you $10,000. Multiply that with all other trade that I've taken this morning. For those who have big money, still have small account. I trade because of small account. All right. Trade that way because when you are consider how to trade using small accounts, 0.01 loss size will be good for you. All right. All right. So, but the point is that you see, this point where I took the profit for the buy trade happened to be, you see, I talked about this yellow orange line here, and then this one is a trend line from 4-hour time frame. All right. So you can see at the point for the buy trade, you see the trade terminated here. All right, eventually terminated on that line at first, and then reversed. All right, after forming some candlestick pattern here. All right, it reversed and gets to the zone, to the other block. This is another block here, and that's from the other block. That's where it reversed. See, it's reversing again based on another candlestick pattern here. All right, that is bullish engulfing. That is here, the bullish reversal, and you can see what has happened. The market has since reversed and start going up. All right. So, guys, this is why it is important that you know how to read your candlestick pattern, because it can make or mar your trade. It might just be the problem you've been having for those of you who have remained unprofitable, even though you have done your best and done everything that you could. All right. So the zone combined together with candlestick pattern is very, very important for you to actually understand how to read candlestick pattern, so that you combine with your zone and begin to know when to take and exit your trade. So, guys, I will see you guys in another video. Go and learn candlestick pattern. It's very, very important. Bye.